Gold is the biggest position in my family's portfolio, making up around 15% of it, and we got in back in 2021 at the $1,800 level, which means that by now we are almost 40% positive. But if you think I'm cashing in my profits, you are mistaken, because honestly, I believe gold has a lot more room to go in the coming years and maybe decades. And in this video, I will explain you why I think that's the case. So, why is the current scenario so bullish for gold? Well, the most immediate reason is because people are worried about a coming recession. This makes investors flee to gold, which has always been seen as a safe haven during tough times. However, while everyone's fixated on the word recession, they are missing something crucial, because the same bad employment data that recently came out, triggering these recession fears, has also made it much more likely that the Fed will start cutting interest rates much more aggressively than originally planned. And this is important because lower interest rates end up being bullish for gold. But why? Why do gold prices go up when rates go down? Well, it's simple. It's because gold doesn't pay you any interest. Gold is just a hard asset. And when you invest in gold, you are passing up the chance to earn interest from something like government bonds. That's what we call opportunity cost. The higher the rates, the more you are sacrificing to hold gold. But when interest rates drop, so does your opportunity cost, and this makes it easier for investors to choose gold, since they are not giving up much in potential interest. And that's why gold tends to rise when interest rates fall. Besides, when interest rates drop, this ends up resulting in a weaker dollar. And if the dollar value goes down, this means that the price of hard assets, such as gold, goes up. So, if interest rates are set to drop, I think it's logical to expect gold prices to rally. But the main factor that makes this financial environment we are currently in so bullish for gold is the global fiscal mess and the massive debt problem we are seeing everywhere. Take the US for instance. They are more financially leveraged now than they were during the Second World War, with their debt corresponding to around 120% of GDP, which is huge. Or take a look at Japan, with an unbelievable debt to GDP at almost 270%. And these countries are far from being the exception. Quite the contrary, actually. They are the norm. But as we can see here in this map I took from the IMF webpage, the debt situation in the world really should worry us. For example, Italy, debt to GDP at 140%. UK, at 100%. Canada, more than 100% too. And this is a 2022 map, but the overall picture continues to be the same. Okay, but what does all this debt have to do with gold prices rallying? Well, remember I told you low interest rates are good for gold? Keep that in mind, because with all this massive debt, if interest rates rise, so does the cost of servicing that debt. So if you are a very leveraged country, this is a big problem for you. Now, as we go through the next charts, what you need to ask yourself is this: can the US and the rest of the world really afford high interest rates? Because if they can't, this means that the tool to control inflation and currency depreciation is kind of broken, as higher interest rates are becoming less and less of a viable option. And well, gold thrives in such an environment. Anyway, look at this chart. This is the US federal surplus or deficit as a percentage of GDP. Currently, the US deficit stands at 6.3% of GDP, which is pretty bad. Actually, this is one of the worst measurements in history, if we exclude the pandemic period and the Second World War period too. The problem is that if the state is spending more than it collects, this means that it has to take money from somewhere. So now it is financing itself through debt. The problem is that interest rates are super high now. Actually, interest rates are at the highest level in 2 decades. So that's not cheap money, that's not cheap debt. It's not a surprise that, as you can read here, for the first time the US is spending more on debt interest than on defense, because the financial leverage is just too high. And that's why the US needs lower interest rates, not being able to really afford high interest rates for a long period of time. And you can say the same about the rest of the world. For example, Spain, which has a debt to GDP at almost 110%. In 4 decades, as we can see here, Spain only delivered a fiscal surplus from 2004 to 2007. Excluding this period, we can only see deficit. Now, do you think Spain can keep on going like this with high interest rates? Because I don't think so. Or what about France with the debt to GDP at 110%? In 4 decades, France didn't deliver one single year of fiscal surplus. That's incredible. France cannot live without borrowing. The thing is that with this kind of financial leverage, high interest rates for a long time is like a death sentence. And the same can be said about other developed and underdeveloped countries. For example, here in Brazil, where I live, interest rates here are at more than 10%. And the current president, Lula, really wants them to go down because it has become quite expensive to service our debt. And well, the state wants to spend, right? Anyway, my point is, as there is too much leverage in the global system, it's just hard to maintain high interest rates for a long period of time. Besides, honestly, there is also no political will to do so. So what I see is interest rates coming down and staying low in the long run. And remember, low interest rates are bullish for gold. And things could be different, but I think that this tendency that the governments all around the world have to overspend and to run on deficit and debt will hardly change anytime soon. And I think this is due to an intrinsic characteristic of democracy. That's why I call this chapter Democracy's Trap. Now, what do I mean by this, democracy's trap? Am I anti-democratic? Not at all. But democracy is not perfect, it has its problems. As Churchill said, democracy is the worst regime there is, after all the others. But think about it. In a democracy, the person who gets the most votes wins the election, right? So what do politicians do? They focus on convincing people. And who usually wins? The candidate who sells the best dream. The candidate who promises to fix all the injustice and to do more for the people. Which usually means taking on more expenses, which in turn means more deficit and debt. On the other hand, almost nobody would vote for a candidate who is trying to do the right thing by cutting spending. It happened now in Argentina, but only after years and years of suffering and crazy high inflation. But really, people have to go through hell before they will vote on someone who's talking about cutting spending. My point is, it's really hard for the world and for these countries we've talked about, many of which are among the largest economies in the world, but it's really hard for these countries to change this operating model based on fiscal deficits and debt, at least in the coming years. For that to happen, political programs would have to be a lot different. But changing the direction of this ship is really tough because anyone proposing austerity and spending cuts would hardly get elected. So we end up with a very interesting scenario for gold because governments will keep spending and spending, running on huge deficits and completely dependent on low interest rates. And that's why I believe the upward trend for gold is at its core secular. So these are some of the reasons why I think gold will continue to go up in the years ahead. Anyway, that's it for today. See you next time.